right, guys. So we'll be going over supply and demand trading strategy. This is across any market condition, guys. This is across any market overall, whether it's crypto, Forex, volatility index, whatever it is, futures, you can trade supply and demand because it works across the board. So this is our introduction, a beginner friendly to those who want a strategy, those who want some consistency within the markets. All right. So what is supply and demand? So basically, supply is where sellers are selling in the market. Demand is where buyers are in the market, right? So it's basically like the support and resistance areas. But that's just basically the brief of supply and demand, right? So the market, we all know, moves between buyers and sellers. As I said, the buyers are the persons who are at the demand zone, and the sellers are those who are at the supply zone. All right, so just we already know that our supply zone is where we have persons selling, right? And our demand zone is where we have persons buying. We're going to find these demand and supply areas. So starting off with the first one, we'll find our supply area, okay? And this is how we'll find a supply zone, because with the supply zone, right, we want to look for where price rises, then drops shortly. So basically, we want to look for a price rises and then it's dropped shortly. So we'll see that this burst in movement, that explosive type of movement within the market. So that is how we're gonna find our supply area. So we take our rectangular tool, right? And we'll mark out from the top of the candle, which is the top of the wick, and to the bottom of the wick, right? And we drag it out. And one of the things that we're looking for within the supply area is choosing the candle, is we look for the last opposite candle before that movement, before that sharp drop within the price, right? So this would be the last opposite candle, because we are going up and then we see our price drop sharp going down, and then it just continues selling off, right? So we can mark out that as our supply area. Now, in this area, persons are going to look to be selling in this area, right? So persons are going to be selling in this supply area. So you want to be selling in this area, right? This is our selling. And what do we see when price taps into our supply area? It sells off. So it taps in and then it sells off, right? So that's what we're looking for in our supply zones or supply area. Price taps in and then it's just sold off completely, right? And how do we, manage our risk? We normally aim for anywhere between a 1 to 2 or 1 to 3, but for beginners, a 1-to-1 is gold. A 1-to-1 is perfect. Many persons hate a 1-to-1, but with a 1-to-1, your risk reward is high and it's a lot safer. It's a lot convenient. You don't have to be stressing or be in the market that long. 1-to-1 is a good risk reward, and what we do is that we'll go for our short position, right? So go for a short position. Make sure our stop is at the top of the supply area, right? So our stop loss will be right up here, and then our take profit can be somewhere around the bottom of here. So we're looking for a nice like 1 to 2, 1 to 3 with this type of setup. And this is how we'll normally go for our supply areas. And this is where persons are selling, right? You find that other persons name these areas like order blocks. It's the same concept. People just rebrand it and sell it back to other persons, but it's the same concept, right? So instead of just calling order block, people call it supply and demand. Instead of calling it supply and demand, people just call it order block areas. And this is where people claim that, big institutions like hedge fund banks are entering the trade at order blocks at supply and demand zones. It's all the same concept. And this is how we just normally do our trade. Pretty simple, but it is really effective, right? And as I said, guys, this is something that is simple, simple, simple. And it works real good in the markets. So we'll just look for um demand zones right now, right? So just move this real quick. So with our demand zones, it's the same thing, it's just in the opposite area, right? So with our, we're looking to buy, right? This is our support area. We're looking to buy. So price drops suddenly, right? So price drops, then suddenly shoots up with a large candle. So it goes up, right? So as I said, it is the last opposite candle within the trend, right? The last opposite candle within the trend. So we're looking for where price drops, then suddenly shoots up with a large candle, shows that buyers are strong in that area, right? And you look for the base of the move where the rally starts off. And it's the last opposite candle. So mark off on the top of the wick to the bottom of the wick, right? So that's what we're doing. Mark off on the top to the bottom of the wick, then you just drag it out, right? You drag it out. So this would be our demand area right here, our demand area, guys. This is our demand area. So we're buying at this area. We're buying right here, right? And what do we see when price touch this demand area? When price touches the demand area, it buys. It goes all the way up. So we get one buy right here, right? See, you see the reaction? We get the reaction right in this area. This is where we got our reaction from. And what do you see? Price just continues to go all the way up, all the way up. And this is how we catch our move within the market. This is how we catch our supply and demand, right? So when we're marking out our supply and demand, remember, for the demand, mark out the lowest candle body or wick before price push up. So the last opposite candle before the uptrend, right? This is the last opposite. You drag it out, right? And then for the supply, mark out the highest candle body or wick before price drops. And this would be right here, right? And with our demand, we're looking to go along within our demand. So we could actually target something like this. When price touches from here, our stop loss will be right below the demand zone. Our stop loss will be right below the demand zone. So guys, our stop loss will be right below our demand zone. And then, as I said, it depends on your wish to reward. You can go for 1 to 1, 1 to 2. But we can see where price go all the way up here. All the way up here price goes. And it just continues and continues to go even further beyond. And this is how we catch these simple moves with our buying and selling within the demand and supply areas. As I said, persons call it order block trading. It's just whatever you take that matches your psychology, that matches your mindset, And this is how you enter the markets, right? So there's other things when considering when doing like supply and demand. This is just like the basic concepts. But you have to have the patience, guys. You have to have the patience, right? You wait for price to return to the zone. Once price returns to the zone, you may react again. So in a demand zone, price may bounce, look for a buy. In a supply, price may bounce down to look for a sell, right? So we're not just entering because price is hits the zone, we're waiting for the confirmation. And that confirmation is, the reaction candle. Did we get a reaction candle? And as I said, guys, we're not just entering because price entered the zone. We have to get that reaction candle. And that reaction candle is that buying candle for the demand, right? So I have my highlight in black. So, but as you can see, it's going up. You get that reaction. You get that reaction in the zone. But what if it didn't get no reaction in the zone? Then we wouldn't enter. For the supply, we see where the price came in and had a white candle form and sold off. So it all depends on, we're waiting for that confirmation, waiting for that entry type. And this is what we're looking to do when we're entering these areas. So we're waiting for that confirmation. We're not just entering because our price is in that area. We have to wait for the confirmation. If we don't have the confirmation, we can't enter none at all. And this is just what we're doing within the supply and demand. Now we're gonna go again to see if we have any form of other supply and demand. So just looking at the trend, right? Just looking at the trend. Just looking at the trend. We're gonna take our time, identify the supply and demand areas. So here's a one right here. There's a supply and demand area right here. So this would be our demand area right here. Looking to take some buys right there. Here's another one. Looking to take some buys right here. Right? Looking to take some buys right there. And one of the main reasons, guys, you will see a lot of these supply and demand zones, right? But some of the zones are not valid. Reason being, price may go down into those zones, do a little reaction, and then go straight through it, right? But some supply zones that I tend to find that are the strongest are some supply zones that I tend to see that have the best demand areas are the ones that are at the extreme bottom of the market, right? From where it's the original movement shift started from, right? So what we're looking for is also looking for a break of structure or a market structure shift within the market, right? So we see where price was in a downtrend, going down, and then we saw where price move up, right? So what happens is that it changed character. It did a market structure shift or a break of structure because we had a high right here, right? And price broke this area. So it confirms that the supply zone or the demand zone is strong, is effective, right? And when price comes back into these zones, right, we're looking to buy. We're looking to take that bar, take that sell, depending on the supply and the demand zone. So this is what we're looking for on a day-to-day basis, right? We're looking for that reaction. So we see where price would like to come back here and then do a takeoff in that area, right? Looking to price do a little takeoff or whatever you want to do in those areas. Or, and here's another one. And here's another one, guys. So price came down, broker did the internal breakout structure, right? This was a previous high and it broke through it, making this demand zone right here. a strong one. But as I said, for the most effective demand zones or supplier zones are the one that starts the trend overall. This one, price comes here, you know that it's gonna be going up, right? And the same thing with this one, price comes here, that's gonna be taking off, right? So, but as we see, price marked out our demand zone, right? Right? Marked out our demand zone. Marked out our demand zone. What do we see right here in our demand? What do we see right here? We're looking to buy, right? Price came into our demand zone right here. And what? It did our, we're not just gonna enter because it came into the demand zone. We're waiting for that candle, the opposite candle to form, right? So we're gonna buy. We're waiting for the buy candle to form, right? So we're waiting for the buy candle to form, which is this black candle. We're waiting for it to form, and after it form, it holds within the demand zone, right? And then it goes take off. So we're looking for that rally. We're looking for that explosive movement out of that demand area, right? And that's what we see happen. It took off, consolidated, but it went up into the supply, went up into the supply, it sold off. And then, vice versa, you see where it went back into the demand zone and took off again. So this is what we're looking for. We're looking for those confirmations. We're looking for those, break off structure or market structure shift, whatever you guys want to call it. But we're just looking for a previous high to be taken out of, so that break off structure movement we're looking for to confirm our demand zones, right? So looking for that break off structure, you can call it BOS, break off structure, right? You can kind of call it break off structure. And we're just waiting for those confirmation. And I said, once we get the confirmation, we can enter the trade. We can enter the trade because what? We got in our confirmation within the market. So one, you're gonna be using the rectangular tool. I'm using Trading View. You can use it on MetaTrader, whatever it is. But we're gonna using the rectangular tool, right, to mark out our areas of supply and demand. The rectangular tool we're gonna be using, and we're gonna be waiting for price to return to the zone, look for the confirmation, that candlestick or structure break, set our entry, our stop loss, and take profit and manage our risk. And also, guys, we're gonna be practicing on that demo account, right? On that demo account, we're gonna be practicing on that demo account as well. So we place our stop loss right below the demand zone, and then wait for price to reach in the demand and take off. And you can do your little 1 to 1, 1 to 2, whatever you think it is, are comfortable with your risk management. But as I said, for beginners, I recommend 1 to 1. And as you get more confident, you take a longer setups like a 1 to 2, 1 to 3, 1 to 4. Some people go 1 to 5. But as we can see, guys, it works. Demand taps into the demand, buys, then taps into the supply, sells off. And that's basically it when it comes to the beginner entry of the supply and demand, or order block trading type of confluences that we're looking for within the market.